Good morning. It's Friday, July 12th, about 6 a.m. Central Time. Overnight, the precious metals are correcting after yesterday's explosive rally. You've got August gold down $18 at 24.03. That's about down 0.75%. Silver futures down over 2% right now at 30.95, down 72 cents. So yesterday we saw the latest consumer price index report, which showed inflation is cooling faster than expected. Month over month CPI came in at negative 0.1%. Core inflation 0.1 versus 0.2% expected. Year over year was 3% versus 3.1% expected. So big miss on all the readings here. Inflation coming down quite a bit. The expectations for the Fed making its first interest rate in September had spiked to a 95% chance. Immediately we saw the US dollar index break below the 50-day moving average and correct back down to the 200. Commodities across the board spiked. Japan intervened in its currency and gold futures surged $48. Many of you were playing upside call options on the Japanese yen, which worked out great yesterday. We saw a big unwind on that carry trade. Remember, with US interest rates so high, what's happening is people are borrowing Japanese yen, they convert it to dollars, and they invest it into US treasuries. So they are essentially short yen, long dollar. And what they're doing is, with that interest rate expectation coming down because of that interest rate cut, they had to unwind that trade. It was something like 3.5 trillion yen. So looking at the markets here today, we do have a few things we got to watch here. So the Fed watch tool, if you look at the July meeting, it has come down. It's only about a 6.7% chance that they will cut rates in July. That was 10% yesterday. And then that 95% chance had corrected down to about a 90% chance that the Fed will cut rates. So looking at other things here, we are going to have some reports come out. And the report here that you're going to want to watch is that core PPI. They're expecting a little bit of an uptick, 0.2%. If you look at the PPI month over month, they're looking at that where it was negative 0.2%. They are expecting an uptick there to 0.1%. So looking at the weekly performance, taking it down, anything that kind of sticks out here, gold just slightly higher, up 0.31% on the week. Silver is down 2.25% on the week. So you could see that silver, if you look at the charts, not really going anywhere. So if you remember, we had a big 2-day breakout. That was the July 3rd and then the July 5th. So last week we closed on an upswing. And then since then, this week, it's been kind of choppy back and forth. And then we had that spike up yesterday and the correction down. So no real performance action whatsoever in the silver market. I think your close-in support is going to be about $31.11, or I'm sorry, $30.11. That's the 50-day moving average. Line in the sand about $29.38. So we break below there. Chances are we are going to be looking at a bit of a washout here, and we could correct quite a bit more. The thing that was really suspicious yesterday, and if you're working closely with me on the silver market, we took off a lot of silver, and the reason was because silver, it should have been, with gold up $48, silver should have been up at least $1.15 to $1.30, maybe even $1.50. And with copper futures down, they were down pretty massive, down 2%. It was down 10 cents most of the day, and it couldn't catch a bid whatsoever. Silver and copper have a strong interconnection right now. So it looked like that was kind of your warning sign to maybe reduce some of your silver at that level. Remember, you can always put positions back on, especially if you get that strength in that breakout. So you really want to see silver futures take out that 31.79. That was that high on July 5th. Now, if you look at other markets here like gold is hanging in a little bit better, and I think that's why the gold-silver ratio is having a bit of an uptick right now. So if you look at gold squeaking out that positive breakout, so if you go back to Thursday and Friday, same kind of action that silver had, where we finally pushed up out of a consolidation range, broke out to the upside, but since then we've consolidated sideways. The red flag here for me is that yesterday it triggered a long on my breakout system. It's similar to a turtle trading system, but you have no follow through in there, so it's a bit of a warning sign on that market. Now copper's down 2.75% on the week, and you're also seeing the worst performing commodity out there, palladium. So we'll want to keep an eye on that, see if it's getting back down to any kind of value zone. But keep an eye on that PPI report at 7:30 as that might move some of these markets. And then later on at 9 a.m., you're going to have that University of Michigan, the consumer sentiment, and then also the inflation expectations. The previous reading for the inflation expectations was 3%. So if you're looking at other markets that possibly to trade or get involved with, crude oil futures look like they may have forged a small bottom here on the markets, and they could work their way up. You want to add to any kind of strength where if we can break out above yesterday's highs. And then that copper market, continue to monitor that as that may have made a low. If you start to see that move up aggressively, it could also mark a small bottom on this sell-off that we're seeing here in the silver market. You got any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.